All right, Curtis Howe here with Smart Social and Frank Bonin with the Wasatch Action Coach. We want to talk a little bit more. Last week, if you watched the video, we talked about some core principles for your business. And Frank had brought up a couple of ideas of mastery, things that you needed to master, if you remember. In fact, remind everybody about the two that we talked about.
So the two mastery levels that we talked about last time was destination mastery. Make sure your business is going to take you to the destination that you want it to take you to. Then the second one was time mastery, under the concept that there's no such thing as time management because we all have the same amount of time. So it's all about the mastery is the mastery of yourself, yourself as a person, the decisions you make, the priorities you make, and the actions that you take. And that is basically the first two sections that we spoke about last week.
Awesome. So you said you've got a couple more of those that you want to bring up as well.
Yes.
To get into about this. So these are a couple other points that you can use in your business to help improve your business. The foundational core pieces basically to make your business run better.
Right.
So what's number 3?
So the foundational core is all about removing the chaos so that your business can run and then grow and be profitable. So the third level, the third portion of the mastery is money mastery, because money is essential to a business. It's not the root of all evil. It is the thing that makes a business function, and it makes society and everybody's lives work together. But for a business, money mastery means some very specific things. It means really looking at the financials of the business. Okay, we're talking about your profit loss statement, your balance statement, your cash flow statement, your budget. Looking at those. Most people, Curtis, how often do you think most people look at a profit loss statement?
Only when the tax person gives it to them.
Generally, that's the case. So sometimes annually, at best quarterly. Really, what that means is a person is looking at their profit and loss statement, and maybe not even a balance statement, and almost definitely not a cash flow statement. But they're looking at it and reacting to it. So they're making reactive decisions. So in order to remove that money chaos from the business, the money mastery level is truly understanding what those statements are and looking at them on a regular basis, at least once a month, maybe even more. And when you're looking at them on a regular basis like that, that enables predictive and proactive money decisions, so that you can decide early on with the indicators that happen early how to get your business to the place that you want it to be. If you wait till the end of the year, it's really too late to make any changes that year. It's just too late.
Totally. No, I totally agree that you need to track that. This is, understanding where your money is coming and where it's going is super, super important. So if you're not familiar with the idea of a profit and loss statement, or it's also called an income statement sometimes, or a cash flow statement. So the thing you want to think about is you want to itemize out all the ways that you're generating income. So what are all the products you sell? How much are you selling each month? What services you do, which ones are you doing, how often are you doing them, so that you can see here's where our income is coming from. And that can give you some really good advice, because you can start to see which products or services are selling better, which ones have your better margin on them, and those kinds of things to help out. So that can at least help you understand where your money's coming from. And if you see on there some that you say, hey, these ones are smaller ones, why don't we use these as add-ons to get more, or do follow-ups or other things to generate more wealth, more sales from our current customer base? That way, there's a lot of little tricks and things you can look at. But if you're not examining this, you won't know where to start looking to help you to grow your income. So you want to have that, and then you want to have a section with all of your expenses. Where's your money going out of your business? So that's paying your bills. That could be rent for an office space, or it could be paying for vehicles, the loans on your vehicles, or loans on equipment. It could be buying software, like accounting software, or a CRM software, or having an email system, or whatever it is. You want to itemize this out so that you can see where that money is going from. And then what you want to do is you take your income, total income, and you subtract out your total expenses. This gives you the magic number called cash flow. this cash flow number is a really important number because it tells you if it's a positive number, then you've got money at the end of the month. If you don't, if that number is negative, then you've got month at the end of the money. And that's a bad spot to be in because that's usually when your debts start to rise because you're having to use your credit card to keep things running.
Absolutely.
You know, and that's not good because the longer you can run with a negative cash flow number, but the longer you can run depends upon the amount of credit you have and the amount of savings you have because you're slowly digging through those.
Right.
And that's not good. So if you have that as a positive number, then you have the magic to grow your business with because it's that money at the end of the month that gives you the ability to build wealth.
Yeah. So a great way to look at this is it's actually critical. It's a break-even point. What you're talking about is looking at it at the month and seeing where you're at. But from a predictive standpoint, going into the month, how many sales do you have to make before you have paid for all of the expenses? To get that, what you have to look at is what are your variable expenses per sale? Because all sales, all transactions are going to have some variable expense. And then what are your fixed expenses? And so with the profit that comes from each sale, the profit margin of each one, how many of those sales have to be made in order to overcome your fixed expenses? And so looking at it per month, that's great. But something that a lot of people don't think about, how many sales do you have to make in a week in order to hit your break-even point? How many sales do you have to make in a day? For some businesses, tracking that daily sales, that's a key performance indicator, a KPI. The hitting that break-even point every day is absolutely critical so that you know, are we on an upward trend or are we on a downward trend? And we identify that trend absolutely as soon as we can so we can make proactive decisions in order to turn that trend around and stay in the cash positive.
Totally. No, and that makes sense. That's another great way to use that document because you do need to know, okay, here's my sales coming in, but of course, like what you're saying is, what does that mean, you know, on a weekly basis or on a monthly basis, because that'll give you some ideas of knowing before the end of the month whether you're on track. So, and that's when I did direct sales, we broke those numbers down as well into how many, you know, because if you think about it, if you know, okay, I need to close these many deals per week in order to keep my income where I need it to be, then you can start to look even further back and go, okay, if I need, you know, if I need to close 4 deals a week, then I look at my closing ratio. If I only close 1 out of 10 deals, that means I need 40 deals to get 4 closed.
Absolutely.
And if that means if I got 40 deals to do, how many leads do I need to generate or how many people do I need to talk to get those 40 deals, to get 40 people that'll reach that point in the process.
Absolutely.
And that could be 100, which means I need to get in front of 100 people every week to get the 40 deals that I can work through and get 4 to finally close.
Yes.
So knowing those numbers will help because then you can start to really predict where you need to be in that process, basically, to get things done. So those are really important concepts that'll help you in predicting your success in your business. And I totally agree. If you're not tracking that stuff, man, good luck trying to grow your business because you're just like, I don't know how to grow. How do I find more clients? What do I do? How do I put the right pressure in the right places to get the launch, the growth that I need?
Yeah, exactly. And that's why we call it a level of mastery. It's a foundation. It removes the financial chaos from the business by knowing these numbers, tracking these numbers, understanding these numbers, and then making predictive and proactive decisions based on these numbers.
Yeah.
So if you're ready,
so the fourth area, yes.
Destination mastery. So now we're getting to the actual product, the thing the business owner is so excited about. Smart social, social media, doing exactly what we're doing right now. That's fantastic. This is destination mastery happening right here before you. Okay, so but really, what is it? What does destination mastery mean? Does it mean the absolute best thing? Does it mean the most efficient thing? What destination mastery means is the thing that brings value to your customer delivered at the right time at the right place. For example, let's look at a massive chain. McDonald's?
Yeah.
Okay, McDonald's. Do they have the best hamburger? No, not even
I
close.
was about to say.
Are they wildly successful?
Oh, man, yeah.
Absolutely. Because they have identified what their customers need, what they need, how to get it to them at the right time, the right place, the exact same thing everywhere. That is specifically destination mastery right there.
Well, and they've mastered it so well that you can literally hire a bunch of teenagers to run it.
Absolutely.
And
Absolutely.
it runs.
It
You know,
runs.
and they track their metrics because they can tell you how many millions of people they've served.
or billions.
Or billions, yeah.
So the destination mastery for a individual business's product is really about the value you bring and making sure that the customer sees that value and understands what they're getting, why they're getting it, and that they get the same thing every single time.
That makes total sense.
That's really the core of destination mastery. Did you have any questions or thoughts on that?
No, so I was just thinking, I mean, that makes sense because when you get into your product, you have to have a consistency there. And you've got to figure out a way to do that. And it doesn't matter whether, again, you're an HVAC company, whether you're a plumber, whether you are selling soap on Etsy or anything, because you have to think about the quality of what you're producing. And is that quality, can we be consistent with that? If you're making soaps, you've got to make sure that you can have your soaps be consistent. They might not be the best soap out there, but it has to be consistent so that people get an expectation of what to expect when they buy your products. After they bought it the first time, they want the next bar of soap they buy to be similar, to have a reasonable expectation. Same with like plumbing or other things. Or lawn care, massage therapy, whatever, if you give a person a great massage the first time and a terrible massage the second time, now you've got a confused customer. So you've got to have a way to do that. If you hire people to grow your business, to be able to do more, it's working on making sure that they can maintain that quality as well.
Right.
That is important. And then when you track that with the numbers, you know where your money is, you know where the sales averages are, where you're at. Man, the beauty of that is when you know that, you can literally write your own check. You can predict your own income. In direct sales, we taught this all the time to our sales team, because once they understood this, their income potential was unlimited. I mean, they could make as much money as they wanted to, because they knew, if I want to get this kind of an income, I need to close these many deals, which means I need to get this many leads and do this and this. And so they start from the beginning and they just run the numbers.
Yeah.
And as you do that, you'll get better at it. So your closing ratio might be 1 out of 10 as you start, but then you start to get to where you close 3 out of 10. And maybe even get to where you get 5 out of 10, which is really hard. 3 out of 10, 3 to 4 out of 10 is probably the sweet spot. Getting to 5 out of 10, where you got a 50% closing ratio, that's where you start to have some problems in your sales.
Maybe, depending on the industry.
Yes.
There's different industries that have
different
standards.
industries.
Different standards.
In direct sales,
Yeah.
it's a little bit of a challenge in there, just because usually that means if you're getting to where half of your deals are closing, then you are usually undercutting your price or something, where it's making it too easy to buy.
Yeah.
And not that that's a bad thing necessarily, but you just need to realize that and go, oh, this might not be ideal in the long run for our business, but it's good that you can close those deals and make that happen. So when you're doing especially high-end sales, 3 out of 10, 4 out of 10 is really good. That's a professional salesperson. But if you know that, and you know that I'm going to go on vacation next week, so I need to close 6 deals instead of 3 deals. If my normal week is 3 deals, I need to close 6, which means I need to double my numbers for the week to get them done, and then go on vacation next week and I have my income covered. So when you know your numbers, you can predict your success.
Yeah,
if you don't know your numbers, good luck finding success.
And essential to getting that is the delivery. The product has to be the same every time.
Yeah.
Because if it's not the same every time, it just is going to keep on being in chaos.
You've got to have that consistency to help eliminate the chaos. I totally agree with you on that one. So those are a couple more principles and ideas to help you with your business. So just realize those things. Follow last week's video as well to get the other 2 masteries in there, and put these together to help you grow your business. Now, if you have questions about the things that we've talked about, or anything specific about how you can apply these into your business, feel free to leave them in the comments below, and we will come back and answer those for you and bring those up. So, or let us know how you've done with this. Have you had a business where you didn't track your numbers, and then did you get another business where you have tracked them, and what difference did that make in your business? So thanks for watching. Please make sure you subscribe to our channel as well, and we will talk to you later.